Hello, everyone. My name is Greg Bordonaro, and I'm the editor of the Hartford Business Journal. Thank you for joining us for our annual Economic Outlook Forum. This webinar will begin with brief remarks from each of our panelists, followed by a deeper panel discussion. We'll take a look at the short and long-term economic outlook for the state and nation and discuss trends that employers should know about for the year ahead. Our panelists today include Kenneth Entenmann, Chief Economist and Chief Investment Officer at NBT Wealth Management, Daniel O'Keefe, Commissioner of the State Department of Economic and Community Development, and Jeffrey Sonnenfeld, Senior Associate Dean for Leadership Studies and the Lester Crown Professor in the Practice of Management at the Yale School of Management. Before we kick things off, I'd like to thank NBT Bank for the support of this webinar as our presenting sponsor. Making this forum happen takes a lot of planning, and we appreciate the support we've received from NBT Bank. Here to say a few words on behalf of the bank is Connecticut Regional President Andreas Kapitanopoulos. Andreas, welcome.
All right, thank you, Greg. NBT Bank is proud to sponsor the Hartford Business Journal Economic Survey again. This survey provides essential insights into how the business community views the challenges and opportunities shaping the year ahead. The results reflect cautious optimism among Connecticut business leaders. More than three-quarters anticipate economic improvement, though workforce challenges remain. Revenue and profit growth projections are modest, driven primarily by new customers and product innovations. Expansion plans are limited, and most firms do not intend to raise capital or make major investments in property or equipment. Taxes, inflation, and labor shortages continue to be key impediments to growth. These are issues that we hear about consistently year over year. Respondents also foresee stable office space needs plus rising healthcare costs, and businesses are preparing for incremental growth amid persistent structural challenges. Some brief information about NBT Bank. Now, we are a $16 billion regional community bank headquartered in Norwich, New York, with a strong presence across the Northeast. We offer a full range of commercial banking services, including treasury management and tailored lending solutions, as well as wealth management and retirement planning services for businesses of all sizes and industries. Our local decision-making allows us to respond quickly, and our focus on building strong relationships ensures personalized service. We have more than 100 employees based in Connecticut with locations in West Hartford and Glastonbury, plus 4 branches in Litchfield County. We're also excited to announce the opening of a new branch in Torrington in 2026. Our team is deeply committed to Connecticut, and community involvement is a core value at NBT Bank. In addition to volunteering our time, NBT Bank supports more than 100 local nonprofits in Connecticut alone. As we look ahead to 2026, we extend our sincere thanks to the communities we serve and to our customers for their continued partnership and support. Together, we will navigate the challenges and create opportunities for sustainable growth. Thank you, and back to you, Greg.
Thank you, Andres. Now I'm going to briefly jump into the results of our 2026 Economic Outlook Survey. During the month of November and early December, the Hartford Business Journal released this survey and asked subscribers to weigh in with their predictions for Connecticut's economy. The survey was emailed to over 10,000 HBJ Today subscribers and received more than 260 responses. The survey found that Hartford Business Journal readers are less optimistic about Connecticut's economy in 2026 than they were a year earlier. In fact, 29.4% of respondents said Connecticut's economy will improve slightly or significantly this year, down from 51.2% who expected improvement in 2025. Meanwhile, the share of respondents expecting the economy to decline rose to 35.9% compared with 22% a year earlier. Sentiment about current conditions also fell. Just 29.6% of respondents said the economy is in better shape than it was a year ago, compared with nearly 48% who expressed that view in the 2025 survey. Hiring expectations softened slightly. About 34.9% of respondents plan to hire additional staff in 2026, roughly in line with last year. But more businesses expect flat employment and fewer anticipate strong workforce growth. Labor challenges remain persistent. Nearly 52% of respondents said it's very difficult or impossible to find qualified workers, similar to last year. If you're interested in seeing the full results of our survey, you can go to our website at hartfordbusiness.com. For now, I want to move on with our program by giving each of our speakers 3 to 5 minutes to talk about the top issues they think will impact the local, state, and national economies in the year ahead. Ken, why don't you get us started?
Well, good afternoon. It's great to be here. Thank you to everybody at the Hartford Business Journal for inviting me. I think we are cautiously optimistic, as Greg pointed out some of the numbers, but I would say if you look at remain the same, improve slightly, or improve significantly, you add those 3 up, that's 63%. So I would put that in the cautiously optimistic camp. I think coming out of 2025, I think it was the year of uncertainty. We had so much that weighed on the markets and the economy, starting with artificial intelligence. If you remember back in February of last year, we had the DeepSeek Chinese announcement that sent the AI world into a tizzy. We had the April 2nd tariff announcement, so we had a dramatic impact in the first and second quarter surrounding uncertainty with tariffs. We had tax uncertainty as we weren't sure what corporations and business taxes were going to look like. We were hoping for regulation and regulatory improvement. And of course, in the last quarter, we had the government shutdown. So great amount of uncertainty in 25, yet the S&P 500 was up 18% over the year. And the GDP of the United States, while it posted a negative 0.6% growth in the first quarter, subsequently second, third, and fourth went up 3.8, 4.3. And if I look at the Atlanta Fed, they are forecasting growth in the fourth quarter of 2.7. So the economy has done fairly well on a GDP standpoint. As we look into 2026, I think some of those uncertainties are somewhat behind us. Certainly more visibility. So in terms of artificial intelligence, we absolutely believe that artificial intelligence is going to have a pretty significant impact on economic activity. I think it is beginning to show. In fact, today, productivity for the third quarter was up a whopping 4.9%. Productivity is the gift that keeps on giving. It helps bring inflation down. It helps control prices. It helps people do more with less. So I think artificial intelligence is showing some promise. I think on a tariff front, while there is still uncertainty, and certainly there might be a lagged effect of some of the tariffs, I think the worst is behind us. We started out with very high tariffs. Many of them were negotiated away. Some of them still exist. The Trump administration has taken some that I thought were kind of foolish to begin with, things like bananas and coffee that we don't make here in the United States. Those tariffs are starting to go away. So, and of course, we have the Supreme Court decision on the emergency powers coming up. So while there's still uncertainty surrounding the tariffs, I think the worst is behind us. And as we approach the 1-year anniversary, the impact on prices, which is where the economics get most challenged, should diminish. On the tax front, whether you like the big, beautiful bill or not, corporations and businesses got tax certainty. So the corporate tax rate stayed at 21%. And there is actually some pretty significant stimulative policy when it comes to expensing of capital equipment purchases and building long-term plant and equipment. And if you recall all of the announcements of major plants being developed here in the United States, 2026 should be a year where we start to see actual shovels hit the ground. The labor market has been slowing. I still think we are adjusting from COVID. We had this huge spurt in hiring coming out of COVID. We had this hoarding of employees because it was so difficult. But where we are right now, where most people will cite a weakening labor market, I still think the labor market's in pretty good shape. We are in what I would call a low hire, low fire environment. Today initial claims came out. They were fairly benign. Challenger Gray said layoffs in the last month were at a 12-month low. And so while the unemployment rate may tick up a notch or two, I don't see, and when you look at the survey where employees continue to demonstrate how difficult it is to find qualified workers, I think the likelihood that we're going to have this deep recession-driven labor collapse, I think, is very small. Certainly, we're going through some adjustments right now, but and it doesn't mean the unemployment rate can't tick up modestly, but I think the labor market is fairly solid over the long haul. Inflation is largely flatlined. We got a pretty good inflation report the last time we saw CPI at 2.7%. It may tick up a little bit, but the good news is it's come down from 9 to give or take a 3% ballpark figure. And I think it will gradually come down throughout the year. I think interest rates will also provide stimulus. As I think we all are aware, the Fed cut interest rates 3 times in the fourth quarter, September, October, and December. And our forecast, if you take the probabilities of the market, to cut rates another 1 or 2 times in 2026. So the impact of those rate cuts that started in September will begin to take effect and hopefully stimulate the economy. In addition to that stimulus, you also are going to have record tax refunds coming into the economy, which will fuel the consumer. And the consumer has been robust throughout this. It's kind of interesting when you read the surveys and the data, what I call soft economic data. The consumer is very pessimistic. Yet when you look at the spending, they've been spending like crazy, and their balance sheets, because of high home prices, because of strong stock markets, their consumer balance sheet has been as strong as it's ever been. And while they tell you they're very worried, they haven't stopped spending. And so when you look at airline bookings and cruise bookings and vacations and resorts, the consumer it's kind of, I'm very worried about the economy, but I can't talk to you anymore because I'm going on a cruise. So I think the strength of that consumer balance sheet, even if we got a modest slowdown in the overall economy, I think that provides a lot of ballast. So because of that, we're relatively optimistic about 2026.
Thanks, Ken. Next up, Dan O'Keefe.
Thanks, Greg. So I'll focus a bit more on the Connecticut economy than Ken did, and be a bit briefer as a result. By the way, I apologize to everyone for my voice. Obviously, I have the cold that the entire planet feels like has right now. In terms of what the trends I expect to see in 2026, I would say the volatility that we've experienced in 2025, I do expect to see that continue. But by volatility, I'm focusing on the macro. I think we'll continue to see some of this global unrest, military interventions and the such. I think that we'll also continue to see some civil unrest, not just what we're seeing today, but even more civil unrest as the year progresses. I think that because I think the federal administration views that as a feature, not a bug. I think the administration views keeping the world on its proverbial toes as a strategy. And for those reasons, I wasn't surprised to see some of the results of your survey, just in terms of people being a bit more defensive in their positioning. I think when there's volatility like that, that's a challenging environment for businesses, because when the macro is volatile, it's a little bit harder to plan. It's harder to plan to invest or to hire or to buy or to build. So I do unfortunately think that volatility will continue. Counter that with what we're seeking to continue to extend in Connecticut. I think Connecticut is steady as she goes. Our economy, we'll continue to see expand quite nicely. The most recent data we have at the state level is the second quarter, where Connecticut expanded the 9th fastest in the country. So continue to be in the kind of top 10 in terms of GDP growth, which was great to see. In terms of challenges, Ken mentioned workforce. That has been a persistent challenge across our economy. I agree with the comment that some of these post-pandemic trends have created this job gap. Connecticut is not immune. We continue to see more jobs available than qualified folks to take them. I think that we're going to continue to work on that problem. So we have made historic investments in workforce and workforce training. But I also think businesses need to adapt and are adapting. I think that in some ways is going to be systemic for some period of time, which just says to a business, the employees you have become critically more important. So retaining and retraining your existing workforce to make sure they can adapt for the future becomes a skill that I think is always important, but increasingly important when we have this kind of structural challenge in workforce development and finding the right people to take the right jobs. What does all that add up in my mind? It does add up to automation. And I know there's a lot of concerns that automation, AI, et cetera, will take jobs from people. By the way, it will. Let's be super clear. And which means the time to prepare is now. I do expect to see AI and automation continue to make inroads. I think last year was a year where a lot of businesses were experimenting, were researching ways to leverage automation. I think 2026 becomes the year of production, where automation becomes not only a competitive point of differentiation, but frankly, a competitive requirement. So I expect to see continued productivity gains because of that across the Connecticut economy. We're already seeing it. So I mentioned GDP growth, and what we're seeing is GDP growth exceed job growth, which from an economist perspective means increasing productivity. Of course, from a person who leads economic development for the state, I'm very focused on making sure we still see continued job growth apace, because obviously jobs are what's critically important in any economy. But I am expecting to see automation and productivity increase as 2026 progresses. And again, I think that is an important thing for all businesses to be preparing for.
Thanks, Dan. And last but certainly not least, Jeff Sonnenfeld, you're up.
Thank you for saying certainly not least. What an honor. It is a thrill to be back with this superstar panel. It's Andreas, of course, with your generosity and the mission that you've given us here today. We're thrilled to have you back as our host, and Greg, of course, framing the issues as you do. Ken, giving us that economic lay of the land. Who could argue with your statistics? As a matter of fact, you cover yourself well by having the good news and the bad news. It's a reminiscent of Truman asking for the one-armed economist, because on one hand and on the other hand, and we'll get to that. And frankly, I kind of share your one hand and other hand approach to what we're seeing on inflation and growth, because there are some it's a double-edged sword. And of course, the good news, and that Dan, that you bring us on things that we're working on here in the state, which are very successful. And if anything, if we have the time, I'd like to talk about more of the things that you and the governor are doing, because I think because of limited time so far in your very concise opening, is that there are more things you have to brag about that you yourself are doing. I think as you talk about the GDP growth in the state, of course, I don't need to drill down on it. It's pretty darn good news. As what we're seeing, and CBIA's most recent surveys are encouraging, very encouraging, looking at job growth. And I think that we look at particular things such as I don't know, quality of life issues, our cities, that we see that the Connecticut cities for 40, actually even more than 40 years, we've seen net declines in our cities, and that's turned around. Not that this is a political statement, but under this governor, we have seen that all of our cities are growing pretty well, and that momentum seems to continue. But some of the things that I think are bright spots is such as your innovation centers, Dan. I think these innovation clusters are very exciting, and what they're doing for everything from quantum to life sciences, and I think that's very important. And I think that the tariff-related incentives, Dan, that you folks are providing, of up to about $10 million of tariff-related incentives to help relocate manufacturing here, has been incredibly helpful. And the exposure that you and your colleagues have, Dan, to race around everywhere, the Paris Air Show again, and all the rest, with the 20 aerospace supply chain companies we have here, is fantastic. But aerospace in particular, this has been, since we met as a group last, we weren't sure how things were going to go with change of politics, administration, all the rest. It's been a great time for Connecticut companies. At General Dynamics, we just saw late summer almost a $2 billion electric boat. I think it was 1.85 electric boat. A contract for submarines, the Virginia class submarines, which will provide jobs for till 2035. In terms of planning, this is fantastic. And Pratt and Whitney has a fantastic, of course, contract with F-35 jet engines of about 1.7 billion or so, which is pretty darn exciting. That's a little bit nearer term. It starts right away. I think it's to around December of 2028. And then Sikorsky, a little bit more than a $10 billion contract for the 99 CH 53K helicopters. That's great news, and that takes us up to again 2034. I think it doesn't kick in until 2029, but in terms of looking to plan for the state, we see that's great on that front. So not just, and this is a lot of advanced manufacturing there, in addition to what we talked about in life sciences and quantum areas and things of that nature, and the quality of life. So I think there's a lot of good news here in the state to turn to. In terms of things that worry me, and I don't want to use up more than my time on our opening here, but I'm a little less sanguine, a little less optimistic than Ken was in saying we have the tariff issue behind us. It is absolutely true that we just days ago, really about 10 days ago, we saw a reversal on tariffs in furniture and other areas, but we have, which is probably not great news for Ethan Allen, which produces everything here and a lot of it here in Connecticut, but produces everything in the U.S. But it's we saw reversals, of course, in pulling back tariffs in a lot of raw uh, uh, products that we need, as you mentioned, bananas, but coffee and things that we don't produce here. That was just crazy. And happily, since Liberation Day, Trump has rolled back many of those tariffs. But we still, in our most recent survey of CEOs, is 72% of them tell us that these tariffs are still bad for the U.S. economy. We asked them how it's going to affect their investment. Fully 60% tell us that they are never going to invest more because of these tariffs in infrastructure and manufacturing. And an additional 10% said they might after 2028, but not near term. So there's not a lot of interest in that, and we see that there's a lot of anxiety on those fronts. We also see in terms of some of the cheeriness, which I appreciate you trying to give us there, Ken, is that that when it comes to consumer spending, it's really income disparity is so enormous right now that massive consumer spending, the analysis of it shows it's heavily on the affluent consumers, not the average consumer, which is why the Conference Board surveys are showing pretty significant drops in consumer confidence. And the University of Michigan, really significant drops in consumer confidence. And in ISM's drop is I think it's a 14 month low. It hasn't been this low since the past administration, and we're looking at so some significant issues there. But again, on the positive side, we that's on tariffs. I worry about the ripple effect for U.S. businesses going into Latin America, the resurgence of the ugly American imagery. I'm here to tell you that I know factually and I know firsthand what you may not have heard on any of the business media, which is that our major oil company producers, CEOs, and I'm telling you this is a matter of fact, none of them were consulted in advance. None of them support this invasion into Venezuela. That Venezuelan oil is a sour, heavy crude, that we get plenty of that already from Canada at a better price than it will cost us to extract it because of the obsolete, antiquated, corroded equipment in Venezuela. None of that, or very little of it, can be refined into fuel oil for gasoline. That's for lubricants and asphalt and stuff. It's not attractive. It's not, and we also have a supply glut right now. So President Trump wants to take oil prices down below $50 a barrel. The break even is above that. So it destroys the incentive for oil producing companies to produce more. In fact, $75 a barrel is what they need to invest more. Right now, it's in the mid 50s, and it's gone lower. So whether or not that is an election day gimmick, it's really going to be hurting the fossil fuel industry. They are not looking. Why do we have this glut? It's because of 8 OPEC nations, and largely because the Saudis have ramped up their production by a third. It's bewildering how when prices were almost twice as high as they are now, they had cut production by a third. Uh, and now that they are down, they have raised production. So you can't help but wonder if there wasn't some political messaging or diplomatic revenge against the Biden administration that the Saudis had. But right now, we are overproducing by 4% every day. We're producing 4% more supply than we need in demand. So even China, people are talking about China buying. China's stockpiles are actually being filled with fuel right now. They have a lot. They're going to be putting it in bathtubs and garages soon. They don't know where to put all the fuel that they've already gotten. So it's there is some issues there about Venezuela, both economically and culturally, what this means about scaring the world. And we worry about a larger backlash against U.S. companies as we're talking about this adventurism against whether or not it's Canada or Greenland or Liechtenstein or wherever else he wants to go, Luxembourg. I mean, it's just getting a little crazy, and that's a great concern. But again, there's good news here. And if I just close off with two bits of good news, is Halda Therapeutics, as a reminder, in life sciences. It's a Yale spinout, but it's they just got bought for $3 billion. But a great, prostate drug, and something which I just wrote about that came out today, if it's okay, and in Fortune magazine, is Amphenol. It is that Adam Norway is one of the greatest CEOs in the country. The only thing I fault him with is he's right here in Connecticut, is that he's too humble. Is that Amphenol is they're a leader in the AI infrastructure build out with really disciplined leadership. They have sensor connectors in everything from cell phones to Boeing cockpits, but they've had record sales and earnings in every quarter published this past year, with revenues surging over 50%. Organic growth in the IT datacom market from an acquisitions program has been very successful. And they basically, their stock has doubled in the past year. They've had some really successful acquisitions, a $10.5 billion acquisition of a company called CommScope that they just announced in August, which is fiber optic capabilities in data centers. And again, stock is up 98% with the 52% dividend increase. And this is a guy who's employing 50,000 people or so, maybe a little bit more than that, maybe 180,000. And it's a remarkable company right here in our backyard. So I think we have lots of good news. But I just watch on the national level and the local level, I'm oddly enough feeling better than nationally.
Thanks, Jeff. Actually, Amphenol is a good story, and if you could put in a good word for us, we've been trying to sit down and do an interview with him. But like you said, he is modest. I don't think he likes talking to the media.
They're so humble. That's the only thing I have against them. Dan, don't you feel the same way? They are so humble.
It's the most incredible company no one's ever heard of.
Right.
Yeah.
He's so patriotic. Some people think that it's in life sciences. Some people think it's it's in electronics. They're an incredible company, and they go for a win-win. This is not a guy who's out there as which side are you on, or union busting, or this or that. He's a very pro-worker, pro-economy. He's very, very devoted. Well, I should also mention he's the co-chair of Advanced CT. So he's really, as a volunteer, really investing in community and government and business collaboration for economic growth.
All right, at this point, I'd like to have all of our speakers. You could come online now. We're going to do the rest of the panel together. Tariffs and inflation. Everybody brought it up. I think when tariffs were first announced earlier in the Trump administration, lots of fears of the impact on inflation. Inflation seemed to be held in check for most of 2025. Why didn't we see that impact maybe more on inflation than some predicted? Might there be more impact this year, or is it because a lot of the tariffs were either pulled back or changed? What are everybody's insights there? Ken, you want to start us off there?
Yeah, I think if you look back a year ago, and you could see it in the stock market reaction from April 2nd to April 8th, I mentioned the DeepSeek. The market was already in a pretty good correction from an AI standpoint prior to April 2nd, but it accelerated violently between April 2nd and April 8th. So you saw roughly a 20% correction in the markets because of the tariff announcements. But almost immediately, all the tariffs were pushed back. There were delays, 90 days. There were a number of agreements with individual companies. And the Trump administration has largely been backtracking. So I agree with Jeff that I don't think tariffs are behind us by any means. But from an inflationary impact, in a pure economic theory, the tariff should be a one-time increase in the price level, and you're about to anniversary that. I think it's also important from a tariff standpoint. Tariffs impact small business, which is really the heart and soul of the Connecticut economy, far greater than they do the electric boats and Pratt and Whitneys of the world. They have purchasing power given the size and strength of those corporations, whereas the mom and pop shops that dominate the Connecticut economy don't. So I think I don't want to suggest that tariffs have not been painful. But I think at this point, I think it's unlikely you're going to see increases in tariffs going forward. We're going to be grandfathering the initial impacts of them. So from an inflationary standpoint, they should start to roll out. That doesn't mean it's not going to continue to be painful, particularly for companies that happen to be in certain sectors that are in the direct sites, of the tariffs.
Sure. Dan, I want to talk about AI a little bit more. How prepared is Connecticut sort of economy, Connecticut companies in terms of AI? Both the investment in technology and workforce, and then you mentioned there will be some dislocation in the workforce. Is that a small concern? Is that a big concern? I don't know what your perspective on that is.
So I'll talk about that first. I mean, so on the concept of a dislocation, it's a big concern, and I think it's a valid concern. I mean, if you look back over history and look at the waves of adoption of different types of technology, everything going back to the printing press or the telephone or the personal computer, the internet, et cetera, there's always this large fear of dislocation. And oftentimes there is a short-term dislocation while we retrain and re-prepare ourselves for what the forward view will look like. In the past, the increase in jobs has always outweighed what has proven to be a bit more of a temporary dislocation. I have greater concerns here. I have greater concerns here because I think, when we talk about artificial intelligence and really applied AI, when we're starting to see businesses and industries really start to understand what can be automated, a lot of that is knowledge work, and Connecticut has a significant exposure, if you will, to knowledge work. So that's why the governor and I are really focused on preparing. The dislocation is not necessarily going to be AI taking every job. It's going to be people equipped with AI taking jobs. So the important thing, I think, is to really invest in our workforce, make sure that our companies are retraining their folks to really understand how to use these tools, much like we retrained ourselves and learned how to use the calculator or the spreadsheet or the printing press, et cetera, et cetera. The example I always like to use is the Ottoman Empire. The Ottoman Empire resisted, it was illegal to use a printing press in the Ottoman Empire for 300 years. And I always ask if anyone's visited the Ottoman Empire recently. Now, of course, World War I had more to do with that than the lack of adoption of the printing press. But my point being is, economies that resist innovations like these, all it does is slow down your workforce rather than preparing them for that ultimate opportunity, where it can ultimately be an opportunity.
Jeff, you talk to a lot of corporate leaders around the country. What are you hearing in terms of AI investment, and which industries are being impacted? Is it all industries? What's your sense from the corporate CEOs that you talk to around the country?
Well, let me give you a twofer on that, Greg. The twofer, because I can't match Greg on the Ottoman Empire, although Dan, the Ottoman Empire has got me thinking. But Ken, I would come at the other side just on your enthusiasm about having tariffs behind us. Ken, we haven't seen those price shocks yet. That's why people are holding back on investment. That's why consumer confidence is falling off right now. That's also why we've had the greatest job loss in the last year as companies are trying to find efficiencies. This is large companies now, before we get to the massive problem on small companies that can't pass it along. With large companies, there are companies here just between we friends. GE Aviation doesn't want to admit what they've done to jack up their prices. And yet all the airline CEOs tell me how furious they are that they're the ones who have to figure out how to take it out of their profits. And the airline CEOs tell me we don't have those profits anymore to do it. But the much celebrated CEO of GE Aviation doesn't want to admit, because he doesn't want retribution from Trump, that he's jacked up his prices. And it's been passed along quietly. Well, now it's not such a secret, and we're seeing that it's happening in terms of job loss. We've had the greatest job loss since we were together as a group last year, Greg. The greatest job loss since 2020, and the greatest job loss since the Great Recession. So it's almost 1.5 million jobs lost. That's not a good harbinger. And then we take a look at what we hear from small, mid-sized businesses. If they've been struggling, especially retailers, to absorb every way possible to get through the holiday season, and the expectations now are that we're expecting to see the price shocks that we haven't seen yet on the consumer to hit us now, which is why Trump is so worried on various fronts with some of the interventions we saw yesterday, particularly in the housing industry and others. And salaries of defense contractors and things, that he's trying very hard to address suddenly what the pricing issues are going to be. But we still have big price shocks, I think, are expected to come our way. It's not behind us yet. And we also don't know how the Supreme Court is going to rule. But Trump is still adamantly saying that tariffs are the most beautiful word in the English language. So I don't know that he has it completely behind him yet, even though he's been forced into embarrassing retreats. When it comes to the question you asked about AI, that is interesting, because a lot of the economic growth we've seen is about 1% of our GDP growth for the first half of the year when it was carefully calculated so far. GDP growth was just over 2% nationally, 1% of it, so half of it, 50% of our growth was coming from AI investing. And it is fascinating to see their impact. There are just 7 companies, and of course, AI is way more than the Mag 7, but those Magnificent Seven, those Mag 7 companies, they represent about $20 trillion. That is fully 1/3 of the entirety of all public equity, all ownership, all public market capital, all market value is represented by 7 companies. 1/3 of it is 7 companies. No, it's not most of the economy. It's not most of the workforce and employees and enterprises, of course. It's just 7 companies. But what that does mean is that we have seen that it is a disproportionate investment. It has been fully 95% of capital expenditure growth. 95% of capital expenditure growth is coming just from AI investing. So if we're to take that out, if something frightens us all, the way the environment was spooked, as you mentioned about DeepSeek last year and things like that, if it turns out that we start to see a cooling, as some are expecting right now, that the undiscussable thing that we hear privately from CEOs is there is no glut, of course, right now in data center capacity, but they're expecting by the end of this year there will be, and companies will start to phase down at that point. We could see that to be some big ripple effect there. So that's a concern on the AI side, and that of course is affecting every business. But thanks for letting me do it too.
Yeah,
Sure.
Jeff, I share your concerns about tariffs, and perhaps there has been a delay. But the New York Fed came out this morning saying that inflation expectations are well contained amongst corporations. Now, maybe the surveys are different, but we haven't
I'll tell you
seen it.
what we just heard 10 days or 2 weeks ago at our CEO summit, and this is only 200 CEOs, but they're from enormous companies, is that 48% of the CEOs, because of their uncertainty right now, whether or not it's tariffs or AI, they're planning. 48% of them want to keep their workforce size the same, 18% to cut, and only 1/3 expected to be. This is nationally expected to do any hiring, but we're already seeing in Connecticut, the Connecticut specific pullout of the Bureau of Labor Statistics reports. We see unemployment increasing from 3.2%, which, by the way, and I know, Dan, this is sort of good news because it's way below the national average, good for Connecticut. But still, we're seeing that increase from 3.2% in November to 4 November 2024 to now 4% in November 2025. Now the national is around, I guess, 4.5%. So we're a little bit below that, but still, we're seeing the unemployment increasing in the state, and they tell us that it has to do with uncertainty over tariffs and expectations of AI efficiency. So, yeah.
But I think I can square the circle between you both, if I can be in the middle of this debate here, which is, we know from history that protectionism ultimately leads to inflation, just because in any industry where you can pass on pricing, you do. But that's a long-term impact, and perhaps it hasn't necessarily shown up in the numbers. And it's partially because, one, it's a long-term impact, and two, it's because the tariffs have been on, off, up, and down. The result hasn't been inflation, it's been uncertainty. And that's what I think I'm seeing in the numbers, right? So yes, inflation above long-term targets. We expect to see some more rate cuts because of that. But the uncertainty of having them being on and off has been the real challenge for our companies, the ones I talk to every day. Second point I'd make about it is, we did launch a program in January. So prior to the inauguration, it was mentioned briefly, called Strategic Supply Chains. And it was actually a $25 million program that we've now added to another 25. So now a $50 million program focused on repatriating production capacity from areas under threat of tariffs to our shores. I expected, of course, optimistically, to see companies shut down some physical plant and move it here. Turns out they don't do that. That's too long-term of a decision to make over what's viewed as a short-term political dynamic. I get that. What we have seen is existing companies here, so companies that are already in Connecticut, expand their production capacity here rather than overseas. That's a short-term sugar rush. I don't think that's a long-term structural change in our economy, but we are seeing some activity there.
I think you did manage to circle the square or square the circle. You did well on that. I think I don't know, Ken, if you'd agree, he pulled we weren't that far apart, but we're just talking about
Yeah.
how we're interpreting the same data. And similarly, the corporate bankruptcies because of this have surged to the highest levels since the Great Recession, and this is just since we were together last in 2025. And there's just an awful lot of fear, and this is more, and Ken, you would say this is speculative, but it's a lot of fear about what's behind a lot of the circular AI financing. It is just a little
Oh,
bizarre. Some
oh
of
yeah.
the feverish deal making. You just take a look at who's doing what with OpenAI. It's like I'm surprised that at Yale we haven't done some big partnership with OpenAI right now. So everybody's doing it, but for the same deal, NVIDIA uh, gets an ownership stake, and AMD has to surrender an ownership stake in themselves. I mean, it's very strange. Is
Oh,
that
yeah, no, I agree. I am very skeptical of AI. On one hand, Amazon, to Dan's point, Amazon claims they have over 1 million robots working in their fulfillment centers. So that's AI. That is clear. It's productivity enhancing. On the other hand, I think some of the circular financing, I think if anything, I think one of the biggest risks to the stock market, largely because of the concentration risk that you already talked about, Jeff, is if this doesn't materialize, when you're spending billions of dollars to build out data centers, and whether the efficiency gets better, whether the electricity doesn't show up, there's a big risk in the markets, and I think that would have an impact on the overall economy if it doesn't turn out. And you look at I think one of the most difficult things for economists, when I look at the productivity number this morning, up 4.9%, that's remarkable. That's inflation controlling. It's a counterbalance, perhaps, to some of the negative impacts of tariffs. Is that sustainable? I think that's one of the biggest questions we have, and I share all of your concern about what you called circular financing. If you look at let me see. Let me get my thinking right. I believe it was well, one firm. Oh, AI, OpenAI, committed to buying $60 billion a year for 5 years of Oracle's computing power. OpenAI has yet to make a profit. Yet they're going to spend $3 trillion over the next 5 years buying computer power, and Oracle is yet to build that computer power and is already running at a 50% debt to equity ratio. That is difficult to kind of figure out. Now, that might, Oracle, I think, is one of the more extreme cases in terms of debt. When you look at, some of the other hyperscalers, Amazon, Microsoft, Google, Apple, they have much better debt. But I think there's great uncertainty as it relates to this. Is AI a bubble or not? I don't think it is, given the kind of the growth rates, but those growth rates better come through. Otherwise, we're going to have some issues in the
yeah
stock markets.
Dan, I
the,
wanted to
the
Dan, I wanted to follow up with something you mentioned that business expansions, maybe not necessarily wholesale reshoring, but existing companies expanding their operations here. What industries is that occurring in? Is it across industries? Or can you just elaborate a little bit more on that?
Yeah, well, so I'm not, we saw it mostly in manufacturing, and it's so the way we announced the program was broadly defined. We said it needed to be a strategic supply chain. So I say supply chain feeding one of our core industries, but beyond that, we were very, very flexible. I would say the majority, and we're about halfway through the program, so time will tell, but the majority so far have been mostly manufacturing companies, and principally in support of our national defense. I don't know that that's as representative as broadly, industries that are under tariff threat, or more so the Connecticut economy, which, as you know, has a large manufacturing base. But that is certainly where we saw it.
Sure. I want to talk a little bit more about the labor force now. Connecticut's Connecticut's been dealing with a labor shortage for a while. It maybe has lessened a little bit. At the same time, our labor force, I think, declined by almost 20,000 since January. Is AI maybe a solution to the labor shortage, in Connecticut and across the country? And is immigration, what impact is that having on the Connecticut Department of Labor? I mentioned immigration, as an impact on our labor force. So is AI a solution? Do companies see that as a solution for the labor shortage? And immigration, what impact is that having? And I'll open that up to anybody.
Yeah, maybe I'll just comment quickly on population trends, and then we can talk about its impact. So if I look at population trends over time, international in-migration has been an important component of our economic engine. So what we tend to do, if you break down our population trends, it's been increasing overall over the last 4 years. So every year since the pandemic, our population's gone up. But we lose people domestically. What that means is we tend to lose more folks to other states than we gain from states. And that's mostly because we have an aging workforce. So we're losing more of our retirees to places like Florida and the South than we gain from places like New York and Massachusetts. We tend to gain people in their late 20s and lose them at the retirement age. So from an economics perspective, I kind of like that trade because we're getting them at the beginning of their earnings journey, even though I'd love to keep them at the end of their earnings journey. But that tends to be what happened. And then we make that up with international in-migration. We do not yet have 2025 population trends. I'm worried about them. I'm worried that international immigration, just with everything going on and the kind of the macro backdrop, that it came under pressure. I'm reasonably sure anecdotally that it did, which will be a bit of a challenge for us economically, because again, that's been an important component of our engine. Whenever I say that, I get a lot of blowback. People saying that these folks are taking our jobs, et cetera, et cetera. That is political rhetoric and hyperbole. That's not what happens. These are folks that come here that are incredible contributors to our local economies, our state economy, and it will be a challenge for us and our economy if that slows. In terms of AI, look, I think it's a tool. I mean, I broaden it. Everyone says AI because that's the big buzzword. It's really about productivity and efficiency. We went through a period where capital was basically free. And I think a lot of businesses were able to paper over inefficiencies because of the application of cheap capital. Those days are over. The cost of capital, while moderated, is still certainly not free. And so the time is important for all of our businesses to focus on their efficiencies, focus on their productivity. It's gone from being a competitive nice to have to an absolute requirement. I think AI is a piece of that puzzle. I said in my opening remarks, I think companies need to figure out whether or not they're going to hire that person, whether or not they're going to leverage an automated approach, or frankly, what will probably be a combination of the two. Start to train folks and hire folks who understand how to use these tools. I do think increasing productivity is a solution for workforce shortages and workforce challenges, but it doesn't mean we need to slow down, and we will not slow down on investing in the workforce of our future. We've announced a series of programs and over $150 million invested in the governor's workforce initiatives to make sure that while we will seek to automate and seek to see higher productivity, at the same time we want to make sure that the Connecticut workforce is ready for the future.
If I would just add to that, if I could, Greg,
Yep.
I think there's some encouragement there that we're looking at Connecticut's Department of Labor. Dan, I think their statistics are around 40,000 jobs that we see coming in that they're expecting will have a surge by the second quarter of this current year. Healthcare, almost 3,000 jobs. Transportation, 3,500 jobs. Manufacturing, over 4,000 jobs, with General Dynamics, Electric Boat and others projecting 5,000 annual hires alone. But now that reminds us then, what are those jobs? It's 89% of our manufacturers report difficulty finding and retaining these skilled workers that are not AI likely to be AI substitute technology opportunities. Food service and hospitality, 3,270 jobs. Construction, 2,135 jobs. What this to me boils down to is looking at areas from electricians, residential and commercial projects, and this is regionally. It's in Connecticut and Massachusetts, this is Rhode Island, Connecticut, as well as Massachusetts and Connecticut. HVAC technicians, energy efficiency and modern installations. We see increased demand, and of course, as everybody knows on this call, welders is with the kinds of of demand that we have, and with the retirement patterns Dan's talking about, that we really do need welders in the maritime sectors in particular, but for defense overall. And in the nursing arena, I'm on the board of Sacred Heart University, and it was just a huge body blow to hear that nurses are no longer, by this presidential administration, considered professional workers, and all these other healthcare workers that we need educational supports and in the pipeline. And I think that I salute what Dan and the governor are doing on that front with public and private partnerships and trying to get more and more collaboration between employers large and small, where they have some shared fate and interest in adopting policies to attract and retain talent. That I think 25% of our 20% of our manufacturers are offering grants for apprenticeship programs and tuition reimbursement and for upschooling, skilling, and things like that. But so I think we're making some progress on it, and I think there's this is a good problem to have.
Yeah, Greg, I think perhaps taking a more macro thing, I think what's made the United States the great economy that it is in fact immigration. I think we can debate the difference between legal and illegal, but when I look at, say, a 25-year growth rate of the U.S. economy versus, say, Japan, or China or Russia or even Western Europe, where they have very little. Western Europe has had a big influence increase recently, but their economic growth rates are horrible. Japan has been flat for 20 years. Canada has been flat for 20 years. So you ask yourself, what's the difference? And it's this: when you think of economic activity, it really comes down to how many workers do you have and how productive are they? And if AI is increasing productivity, the argument, and I agree with Dan completely, the idea that all these highly skilled welders and engineers working at electric boat are being displaced by people from Honduras is just a ridiculous concept. So I think we have to have immigration. And in particular, and this is a global phenomenon, our demographics, because of the baby boomer generation getting older, our population is going to go down simply because people are going to start dying. And you have to replace those people if you're going to maintain economic growth. And given our current birth rates, we're not going to do without immigration. So we can debate illegal versus legal, but I think immigration is a critical component to the success of our economy.
And by the way, I should add one more point. We spend a lot of time speaking to companies internationally, and the governor and I, along with a group, do international trade missions. Increasingly, we are hearing from folks in international markets, not just questions about the nature of the Connecticut economy or our workforce or what have you, but what will it feel like to their employees? Will they feel safe there? Is it a place where my employers are going to want to live? My employees are going to want to live and raise their families. And I think this is actually becoming really important, because Connecticut is a place where we want people to feel welcome, to know that they're welcome here. We do have a high quality of life here, high quality of education, high quality of healthcare. So it is viewed as now being a place where not only is it a great place to start and grow a business, but also a place where employees will feel safe and welcome and be able to raise their families in an incredible environment. That's becoming comparative advantage. That used to be soft and fluffy stuff, right? It's no longer. Now where employees, there's greater fluidity in labor markets because of hybrid work, et cetera, people have an ability to move around a bit more than they used to. There's less friction. And so employers are caring increasingly about how that soft and fluffy element will actually feel to their employees. So the governor and I try to make it really clear and very publicly say that Connecticut is a place where you are welcome.
And then we're got about 10 minutes left. I want to focus a little bit more on Connecticut now. Yesterday was announced Quantum Circuits, a company spun out of Yale Research, is being acquired for $550 million by a California company. Dan, I know quantum technology is a big focus for Connecticut as a potential growth industry. There's a big investment from the state, $50 million in New Haven and Yale in their efforts to grow that sector. Talk a little about quantum as an emerging technology industry in Connecticut. Are there other emerging industries that you see in the state as well?
Yeah, quantum's been a real focus for us, and I'll explain. Quantum technologies, broadly defined, are already here. There's already commercial applications of things like quantum sensing and otherwise, but quantum computing is still a little bit over the horizon. If you believe folks like Bill Gates, within 5 years we'll see broad commercial adoption of quantum computing. And that will be a seismic shift. I describe it as going from like linear to exponential. The power of a quantum computer is exponentially larger than that of a linear computer, traditional computer rather. And I believe, and I don't think this is not arm waving, this is not hyperbole. I think it will solve some incredible problems that traditional computers cannot solve. It has implications for things like cryptography. Once quantum computing is here, every cryptographic token on the planet is immediately broken because those are based on mathematical problems that traditional problems can't solve, but quantum computers can. So huge implications for our national defense, huge implications for the development of new therapeutics. Once you can model entropy, once you can model what happens in nature, the organized chaos that happens in nature happens within the human body, you don't have to wait as long as you're developing new therapeutics to understand how it might impact a human host. I said publicly, and I think this is true, you could see the cure for cancer, literally, not hyperbole, once these applications are widely dispersed. We have comparative advantage in quantum computing. So you mentioned QCI, quantum circuits. That was a spin out from Yale based on research that Rob Scholkopf, who is the founding scientist of QCI, had done along with the person who just won the Nobel Prize for his work in quantum. So Connecticut has real comparative advantage in quantum. And I think if you zoom in on some of our biggest innovations, if you zoom in on a nuclear submarine, if you zoom in on a photolithography machine, these are the machines that make semiconductors. Every advanced semiconductor in the world, 100% market share, ASML, one of our companies based here in Connecticut. Their North American headquarters is right here. So we make these incredibly complicated things here. I think quantum is going to be that next level of growth. You mentioned the $50 million investment. That's in and around New Haven. Because again, I think that the application of quantum in drug discovery and biotech is going to be critically important. But we also announced an investment of $120 million in quantum CT. This is $60 million to stand up the organization. This is a public-private partnership to make sure we'll have a real center of excellence here. And then another $60 million when, not if, we win, because we are competing for a National Science Foundation grant of $160 million. And I'm confident, given the fact that we have comparative advantage here, that this is something that we can really build here in Connecticut.
Sure. The Innovation Clusters Program, I know there's more money out there. The city of Hartford is looking to develop an AI center. Stanford looking to do something similar. Will there be more announcements on those? And then a second question, last year, I believe in the state budget was the Grayfields program to incentivize conversion of empty office space or other type of empty space into some sort of other use. Give us an update on that program and your thoughts on the office issue that exists in Hartford in terms of vacancies.
Yeah, I'm happy to. Two very different topics, right? So innovation clusters, yes, it's a $100 million program, of which we have announced $50.5 million. So there's another just under $50 million that is part of that program. We've made it super clear that that is a rolling program. So as there are projects, and you mentioned the two other finalists, one centered in and around Hartford, one centered in and around Stanford. Hartford more about applied AI and things like advanced manufacturing, finance, and insurance. Stanford is supported by UConn and really thinking about workforce and fintech and financial services and really making sure that AI is something where we've invested in the infrastructure to support its growth. So you asked the question, will there be future announcements? I hope so. I mean, these programs are not there they're there to, success is getting awardees funded. But these are state dollars, these are taxpayer dollars, where we take that very seriously. And so we need to make sure projects are truly ready. And these are very complex projects, a wide variety of stakeholders in these ecosystems coming together to work together to affect these ultimate outcomes. So we're also patient. We work very closely with municipal leaders and the private sector to make sure we all kind of come together and see it all get activated in a way that can be affected. We don't want to award something and find out we have challenges down the road. On Grayfields, Grayfields is modeled after brownfields. This is what happens when a tech guy names something. I'm not as creative as I should be, but the comparison matters. Brownfields is a program that goes after old physical plant where the economic use case has moved on. These are our old mills, our old power plants. Oftentimes these sites have real environmental challenges. They have to be remediated. That makes it difficult, if not impossible, for the private sector to do it because the profit motive doesn't exist. It's too expensive to remediate some of these sites privately. So that's what Brownfields does. It goes, rather than sit by and wait, we go after these sites proactively. We admit we have a problem. We get them remediated, and you get a double win for the economy. You take down something that's blighted. I've called them dystopian hellscapes publicly, and I think that sometimes I'm giving dystopian hellscapes a bad name because they're that terrible. And then once down and remediated, you build something incredible. And oftentimes what you build is mixed use in nature, which also introduces economic flexibility, because economic cycles will always cycle. The more flexibility you have in your physical plant, the better off you are as those cycles cycle. Grayfields is going after the same type of problem. Physical plant where the economic use case has moved on. In this case, it's shopping malls. We have shopping malls throughout the state. Some are great and viable, but some are dated, and given what's going on with the penetration of e-commerce, they become economically challenging. That to me is the analogy of the mills. And then we have these knowledge worker buildings. Not all of them, but these very large knowledge worker buildings. These are the plant analogy. These we need to convert as much as we can to housing because we still have a housing shortage here, particularly affordable housing. But you can't convert every one of these buildings because think rectangular versus square. Rectangular you can convert to residential. Square you can't because nobody wants to be in a windowless apartment in the middle of a square building. If that's the case, then let's move on. Let's get out our stick of dynamite. Let's take these things down and let's rebuild something incredible. And when we rebuild something incredible, let's again do it as a mixed use, live, work, and play, because that's what people want from our cities today. They want a smaller, a greener, more vibrant environment from our urban centers. And I think that gives us a real opportunity. And including in our capital city, Hartford, I think there's a real opportunity with eventually, this is long term, but eventually, the two large highways coming down to grade that'll reintroduce the beautiful river we have running through the middle of Hartford and East Hartford. And by the way, that'll unite the clans. That'll also bring back Hartford and East Hartford as one, true economic center of gravity. So I'm excited what that means, but we're talking 25, 50 years before we ultimately get there. But I'm confident we will get there. There's one last thing I'll mention, and I know I'm going on too long. I apologize. But there's also been something launched called the Vision Committee. The Hartford Vision Committee, it was put together by Chris Swift, who's the chairman and CEO of the Hartford, one of our iconic Hartford-based companies. He came to me early and said he was thinking about more philanthropically what the company should do on behalf of Hartford, given how much Hartford has done for that company. He's pulled together all of the CEOs, truly all of them, of all of our great Hartford companies, as well as both mayors of Hartford and East Hartford, as well as me from the state, and going to put forward a long-term vision for the city. And I love that because that pairs with Grayfields. Long-term vision plus capital means execution. We can kind of get things done. So it's an exciting time.
We're reaching the end of our program here, so I just want to give each speaker a minute to sum up, your thoughts about 2026. And Ken, why don't we start with you?
Well, it's as we've talked throughout this presentation, there's certainly a lot of uncertainty, right? There always is. There's never this crystal ball that shows you the way. I still remain pretty optimistic. I look at the way the economy and the financial markets have been proven to be so resilient, despite all the negativity surrounding tariffs and other things. I think when you look at the potential impact for AI, I share all of Jeff's concerns, but I think it's very difficult to say the 4.9 productivity increase in the third quarter is all AI. I don't think you can say that, but it looks like productivity is increasing and AI will have an impact. I do think while I think Jeff and I have had this healthy debate, I don't think the tariff situation is going to get worse. I don't think we're going to be adding new tariffs. It's a process of reducing them. Whether the impact is yet to be had or not, I think that's one of the big question marks. The Fed doesn't seem to forecast that. And the markets are forecasting cuts in interest rates, where if Jeff's right and have all this tariff inflation, it would go the other way. I think taxes, are very much big incentives and economic stimulus. I think regulatory improvement, some of the things that Dan's talking about, will help quite a bit. And I think lower interest rates will help. So always things to worry about, but we're pretty optimistic, cautiously optimistic, I would say. And then, just one last note on the Connecticut economy. President Trump today proposed increasing defense spending by a third, from $1 trillion in this budget to $1.5 trillion. So that's a pretty big boost for the defense sector, and I think Connecticut would be a pretty clear beneficiary of that. So another reason to be optimistic. Always reasons to be worried.
Sure. Thanks, Ken. Jeff, a minute or two, your concluding thoughts about the year ahead?
Well, first, just responding to Ken, the latest CBIA study says that 2/3 of manufacturers in Connecticut say that the Trump administration's tariffs are negatively impacting them, projecting into 2026, and more than half of them still expecting inflation to be increasing in 2026. And in terms of what the Fed themselves actually just said, they're expecting inflation to be 2.9% in 2026. So, that's a concern about lingering effects of the tariffs. In terms of quantum computing,
Do you think the Fed should be raising interest rates to counter that inflationary threat?
No, of course I did. No, absolutely not. We hopefully Chris Waller will come into the Fed. He's our candidate. He's the overwhelming favorite of the business community, but maybe that's not what the prediction markets are saying. But Chris Waller would be fantastic. But any one of the three candidates is likely to cut rates. I agree with you on that. In terms of quantum, I'm just reminded of two quick anecdotes of quantum circuits. Is that in 2019, Steve Schwarzman, a CEO of Blackstone, of course, and a Yale alum, gave $350 million to MIT. That very day, he was walking down the hallway. I pulled him in the class. And I said, "Why'd you give it to them instead of your alma mater? You realize we're on the frontiers of quantum computing." And he laughed. He thought it was a joke. So I put up a newspaper article that was from just 2 days earlier in the New York Times, just about how quantum circuits towers over everybody, whether or not it was Google, IBM, or anybody, that we're so lucky that Connecticut does lead in quantum computing, and sometimes even our own friends don't know that, and Steve should have. One of those founders of quantum computing, I had him in class a month ago, and I said, "I thought you guys said that you were going to strip away the protections, the crypto protections on cryptocurrency and decrypt it." And he said, "Yeah, we are going to." I said, "Well, you said that would be in 5 years." He said, "We've held that position consistently for the last 15 years. In 5 years, we'll be doing it." So anyhow, you never know on those 5-year projections, Dan, that you were talking about. I do, in terms of what I worry about this creeping state capitalism as MAGA goes Maoist, as demanding stakes in companies, whether or not it's Intel or U.S. Steel. That's, they could fight that on constitutional grounds on the Fifth Amendment. It's the confiscation of, somebody winds up through eminent domain taking property in town, they've got to get compensated for that. And here we're seeing property taken away from people, or the president yesterday saying there are going to be salary caps on defense contractors, or worried about what they can reinvest in or what they can do with dividends or buybacks. It's really, our capital markets are the envy of the world. Our defense industry is so great. We just don't want to discourage them. So I worry about that. I also worry about any political vindictiveness which could come our way, because we are so reliant on federal support, and that ties into blue state, red state issues that we see a massive imbalance, that the blue states transfer $1 trillion a year in payments to the red states. That's the blue states that are the benefactors, and the welfare recipients, if you will, are the red states. It's about $4,500 per person. Blue state people are paying to the red states, and that worries us. Mississippi, West Virginia, Kentucky, Alabama, Virginia, they get twice back what they pay in taxes from the government, and that's an issue of politics. And if we had the Civil War today, we wouldn't win. The base foreclosures are overwhelmingly at the expense of the Northeast in favor of building at the South, and that's been a problem. And then finally, I would just want to say that if you want any more on my concerns about what Trump is doing, this is a nonpartisan book inspired by Jared Kushner, President Trump's son-in-law, and a good friend of mine, called Trump's 10 Commandments. It comes out this next month. and Simon & Schuster, it takes a look objectively at the 10 things that Trump does, love him or hate him, as Jared Kushner told us, before you celebrate or criticize my father-in-law, you have to understand he just operates differently. If you want to understand his unorthodox style, you have to take a look at what he does differently. It works for him sometimes, and there's blowback other times. But that's the last pitch. And finally, I just want to say thank you so much for letting me join this august informed panel.
Thanks, Jeff. Dan, you want to sum us up here?
Yep, I'll be brief. So, Connecticut, we're going to have an election year this year. It's going to be a lot of noise. I'm already starting to see it, and it's a distraction. I'm going to ignore all that noise completely and just keep our head down, continue to grow, continue to invest in the areas that we think make sense. It's defense and offense. Defense is a pun. That is continue to support our not only the companies, our national defense primes, but also all of the supply chains, these smaller companies that feed those national defense primes. It's a great sector of the economy. It's growing very quickly for us as we kind of reshore and onshore that industry, and we'll keep supporting it aggressively. And then offense is these next generation technologies. If you look at the national defense strategy, it talks about quantum, it talks about artificial intelligence, it talks about biotech. Those are all areas where Connecticut has a real right to win. And so the governor and I have been really focused on continuing to support those next generation industries as well.
Thanks, Dan. I'd like to thank all of our panelists today for the spirited debate and conversation. Thank you to NBT Bank for being a presenting sponsor, and everybody good luck in the year ahead, and we'll hear more soon. Thank you.